Hey, welcome everyone. We want to make a quick video to show you the 4 rules, the only 4 rules that you need to trade in the markets like our community does. And so those 4 rules make up an acronym. We can give every single signal that fires off with a buy or sell a strength score out of 5. And so to take us through these rules, I have got the man himself, Dad, with us right now. So I'm going to hand over to him and he's going to take us through each of these rules. Dad, over to you.
Hey, good day, guys. As Tom mentioned, we're going to be looking at the rules. So greetings wherever you may be around the world. It's always good to do some training. And rules are absolutely essential. You know, in trading, unless you have clear boundaries and clear rules, you will lose money. So you have a very simple system that's based on an acronym, which is TASS, T-A-S-S. And the T stands for the trend zones, A is for angle, S is for space, and the other S is for your signal confirmation. So we're going to look at some examples and just look at 2 mainly, and then we'll just apply those rules. So I'm just going to share my screen. And so hopefully that'll come out now. Yep. So here we go. So here's my screen. We're going to have a look just at one of the signals from this morning, first of all, and look at the 5 points. So here, this was this morning on the Dow at 6:44. I was on the charts then, and then a buy signal plotted. And so let's apply the rules and just give this signal a score out of 5. So firstly, trend zone alignment. Now remember, the trend zones are these bands between the 21 and the 13, and also on the MACD. So that's why when I did the programming, I made the colors the same for easy confirmation. So we get 2 points, 1 for the current zone, and then 1 for 3 times higher. So we always want to look for confirmation at a zone 3 times higher than what we're currently trading. So it is absolutely essential on the 1 minute. But the higher the time frame, the less essential it becomes. But I'll still look, if I trade the 3 minute, you know, I'm looking at the 8. If I was looking at the 5, I'd be also looking at the 15. And so let's have a look here. So this one's slightly interesting because we can see on the current time frame, which is the 1 minute, we haven't quite crossed over. So, I mean, it is looking good. It crosses over on the next candle. So we just failed to get a point for the current. On the MACD, we are at crossover, and this is always a great time to enter a trade. The closer you enter a trade to a crossover on the MACD, that is down here, the closer, the stronger the signal is likely to be. So then we have to have confirmation. Unless we look at a signal at a time frame 3 times higher, we will definitely make losses. So let's have a look at the 3 minute. And at the time of that trade, so if we look at the 3 minute trend zone, so here's our buy signal. And so the signal came at this moment on the 3 minute, and this is very strong. We clearly look at this beautiful blue band going up. So that in the main indicator, trend zone is blue, and also there's separation, blue. The MACD line, signal line is all green. So that would be a 1 out of 2. We only just failed to get a 2 out of 2. But that's not a problem because I think I've said before when giving training, when there's a pullback, it does take a slight lag for the current time zone to cross over again and produce, you know, the blue trend zone. So we get 1 out of 2 for the trend zone. Then the next one is angle. That's very important. And we especially look at the high time frame. On the current time frame, we can see we've already just bottomed out. So that's cool. But the most important thing is looking at a time frame 3 times higher. So we can see here at the moment of the signal, we get a clear point, this white line, which is the SMA 21. It's in a beautiful angle upwards. That trade is only going one way. If you can see, by the way, the 3 minute, massive pullback because on the buy signal on the 3 minute, that white SMA 21 pointing right down always pulls back. That's why we look to the high time frame. So far we got 1 for the trend zones. We got 1 for the angle. So that's a great angle on the 21. Then next we look for space. Now let's just pretend this is a fresh signal. There was a lot of space for this trade. So we can see that pink line up there, hopefully it's coming out on the video, that is the R5. So there was 52 pips space with this signal. So we definitely would have got a point for space. You never would want to trade straight into a pivot or any other big round number. That's going to be risky. So there's clear space, nothing also blocking on the 3 minute. And the final one is our signal confirmation. So it's not good enough just to have a buy or sell signal. There must be one other signal to confirm that, say, for example, this buy is going to be strong. So this is a great example because there's numerous confirmations. This is a very strong signal. So you can see, I love the diamonds, that's buyer momentum. So on the candle before, and the way I've programmed this, we normally have the diamonds plotting one candle before to give us a warning. And so we can see buyers back in the market here, sellers try to push it down. So we got one, the candle before, then we also have our boost. This is our trend boost. So on the signal, when you have the boost on the buyer signal, the same would be for sell, that also is a strong indication. We haven't got the trend zone bright green yet, but we can see also if you go back on the same candle, we had our buy momentum. We also had our triangle up in the main oscillator. So that is reverse re-enter. So that triangle up is telling us it's safe to enter. But another key, what made this also a strong signal is we look at the same time that we had the buy signal plot, we can see our oscillator is bright green. And I said some of the secret sauce of this indicator is when our main trend bar on the 3-minute is bright green, you can see price always moves. So we can see a nice move upwards. So just looking for a few other things, what I would have looked at, what I would have liked about this, whenever price compresses, this is our 55 EMA, which is similar to the 3-minute trend zone. So price is compressed here, and whenever the moving average is compressed, there's normally a burst up. The other very strong indication that this trade was going to move is, look here, this bearish candle just wicked onto the 15-minute trend zone. This is the 233. So the fact that it touched there, you'll notice often when price touches the high time frame trend zones, the 15 minutes or the 1 hour, the 4 hour, based on the 1-minute chart, there's always a move after that. So there's a clear rejection of a key time zone. And then we see the move up. Also, if we look at the candle, if we're looking for confirmation on the 3-minute, at this, we can see what's happened just before. The sellers try to push price down. We can see it rejected a big round number. It also rejected the 21. We can see this bearish candle couldn't close below the 55 on the 3-minute. So it rejected numerous levels, and that's what made it a very strong trend. So that would have been a 4 out of 5, almost 5 out of 5. But look, 4 out of 5 is a good signal. So I'd like to look at one other example. I mean, when I was looking, the charts have been so bearish today. Sorry, so bullish. There's hardly been any sells, but there was this huge counter trend trade. So I thought, let's have a look at this counter trend trade, just talk through this signal, if it was any good. Because we haven't talked too much about counter trends. So here we see we had a counter trend at 522. Would that have been a good signal to take? And I would say yes, it would have been very strong. So we look for numerous things. Firstly, has it rejected a line? Well, definitely it's rejected this area up here. This is again is the R5. So price couldn't really break and move above the R5. So it's rejected this area. Remember the R5, a pivot R5, there are sellers. R means resistance, which means there's more sellers than buyers at R5. So it rejected this area. We then get a signal, the counter trend signal, and we can see there's wonderful separation. Look at this beautiful separation in our main trend zone of the indicator. When that separates like that, price is going to accelerate down. And at the same time, look at the wonderful acceleration on the MACD, the separation. So we can see the trend zone on the MACD, wonderful separation. We can see this beautiful momentum picking up. And then we don't always have to look at higher time frames for counter trend, but it's always wise to. So when the signal plotted, what was happening on the 3-minute? All right, so you will find with most counter trends, we're not going to get many after the separation of the 13 and the 21. But we can see here when we got the signal on the 1-minute, the 3-minute was already below the SMA 21. Plus, we can see we hit it at the apex already curving down. But the strength of this signal here, so if we took that signal, if we look down at the MACD trend zone, wonderful separation, accelerating, momentum accelerating, clearly in sell mode, but here's the winner. At the same time that the counter trend signal plotted on the 1-minute, we can see that the main bar in our oscillator turned red. And again, that's some of the secret sauce of this indicator, that this is a very strong indication the trend's going to move. So that would have been a great counter trend signal to take. We can see, I mean, that dropped like a rocket. There was 166 pips in that trade. I mean, the safe target would have been 85. To be honest, if I took this trade, I probably would have put my take profit around the 233. Else I would have just done a trailing stop loss and just followed it all the way down. So very often with the counter trends, I did teach it. I just keep dropping my trailing stop loss. That's what I like about Heiken-Ashi. So if you use that method and you move your stop loss on each candle, we would have been stopped out. Wow, we'd have been stopped out right down there. You almost would have run it right to the bottom. So if you took that trade, you would have got stopped out over there. There was 144 pips in that counter trend. So again, we look at some similar principles. So these are things to look out for. But again, if you follow the rules, then trading definitely becomes safer and far more profitable. So again, those rules, it's an acronym, TASS. T is for the trend zones. You get 2 points, one for the current zone, one for the zone 3 times higher. A is for the angle, and particularly we're looking at the angle of the SMA on the high time frame. So the bar we took, there was a wonderful angle heading up that made it a safe trade. Then S is for space. Is there space for the trade to move? We could see here there was good space here on this counter trend. There was, sort of 85 pip space down to the 233. So always look for space. And then finally, signal confirmation. So we don't just enter a trade if there's just a sell or a buy signal. We want to look for diamonds. We also want to look for the trend bursts, the visible explosions. Then remember, I also said when I was doing some training, these triangles are also signals we can use. The main trend bar on the oscillator going a bright color is a signal. And also, I think I mentioned this morning, is when the 55, this is also the other secret source of the indicator. When this changes color, you can treat that as a signal. So if you're looking at the 3-minute, we did that counter trend. When the 55 went bright red on that candle, boom, you can see how price accelerated down. So remember those 5 points for those, 2 for the trend zone, 1 for angle, 1 for space, and 1 for signal confirmation. If you apply those 4 rules, looking to a time frame 3 times high, I believe you will be a successful trader. So that's all from me. Thanks very much.
All right. Thanks, Dad. So good to have those rules all clearly defined right there and there. So guys, if you want a document that also has those rules written out, reach out to me on social media. I'll get you that. I'm sure everyone on our team already has that. Otherwise, we will see you in our group chat, or we'll see you in our next training. In the meantime, hit the like button, hit the subscribe button, and we'll see you in the chat. All right, everyone.